Well, hi there folks, it's Matt Hayson here looking at everything impacting the city property market this week. Well, as expected, the cash rate was left on hold at 4.35%. However, conjecture does remain amongst our senior economists. Are the RBA doing enough? Is in fact lifting the cash rate the appropriate vehicle to tame inflation? Well, it does seem as though the RBA is starting to lose some patience, even leaving the door open for another cash rate increase this year. Looking at their latest minutes would suggest that the RBA is very focused on bringing inflation back within their target band in a reasonable time frame, and it is the board's highest priority. They've also suggested that they're very concerned about big government spending budgets, which is really counteracting what the RBA are trying to do. And they know now that this is a very narrow path to guide the economy. And they're also very concerned about continuation of rising house prices around the country. Now, traders, they've suggested that they're not going to likely see a cash rate cut this year, and they've pushed back their expectation for a cash rate cut in May 2025. Also this week, and this is pretty big news impacting investors, where the New South Wales government have introduced a very stealthy tax, and they've also broken an election promise in the process by freezing the land tax threshold at $1,075,000. Now, this is going to capture a lot more investors and landlords into paying higher taxes. In fact, $1.5 billion more. And it's no wonder the government is standing around scratching their heads, wondering why there's a shortage of rental accommodation. I'll give you the hot tip. You've overcooked the golden goose. Now, investors, they're fleeing the markets of Victoria and New South Wales. Not only that, the government have painted investors into the corner as being money-grabbing ogres. And we could tell you there is nothing further from the truth. We manage over 4,000 rental properties, and we can tell you that the vast majority of these owners are just your everyday Aussies battling ahead to try and get ahead of this heavily taxed Australian environment. Now, not only that, the data supports it as well. Last month in May, there were 3,600 rental properties on the market for sale. That's a 20% increase from last year. Now, putting all of that to the side, Domain this week have come out and tipped that Sydney property price growth is likely to be 8% over the next 12 months. Now, Nicola Powell, who's the Chief of Research and Economics at Domain, has come out with this forecast and cited the three major things, which is high population growth, a low supply of available property, and also improving borrowing costs, which is going to be driving this house price growth. Now, two of these things being high population growth and low supply of property lay firmly on the feet of the government to fix those issues. So that leads us into this weekend, folks, where winter listings are continuing to increase. In fact, we've got some amazing properties, the best properties that I've seen in winter for many, many years. So keep your eye out on that. It's incredible value, and our entire team looks forward to seeing you out and about. Thanks for watching, and I'll catch you all next week.